we on the line? Thank you very much. Thank you very much for sharing that session with us. I'm extremely delighted to and honored to moderate that session. My name is Orith Azoulay, and I am responsible for the green and sustainable finance business for the corporate and investment bank at Natixis. And the topic of SDGs and alignment to SDGs is of particular importance for us. We have been very honored to be appointed by the IDFC to help them and develop a framework for public development banks to align their activities with the UN SDGs, both from a conceptual framework and the perspective and the development of practical tools and implementation process. Just a few words of introduction. The 2030 agenda and the SDG are a proxy, or probably the finest or the most consensual proxy for the transition to a sustainable world. Alignment with the SDGs is, as of today, an ill-defined notion. And I'd like to remember SDGs are a political framework designed by governments and for governments. Not a list of themes, but geographically and time-bound targets, aligning the whole financial chain based on entities' remits and clout. So here, the semantic of alignment is important and is polymorphous, and I think this is what we're going to be exploring with our distinguished speakers today. We're talking about the collective goal, i.e., it starts with the alignment of countries to their 2030 agenda within the necessary ecosystem needed to achieve it. It's the necessary cooperation and articulation, the alignment of all relevant financial stakeholders, among which in particular PDBs and private investors in their strategic contribution to the 2030 agenda. But it's also the needed change management of entities, the alignment of each institution throughout their organization towards the SDG to bring consistency throughout operations, going much beyond the well-known SDG mapping. To address the topic of collaboration, common language as a basis of how to collectively address how the financial chains can collectively address the SDG topic. We are very delighted to have a very high-level panel with Eric Usher, head of UNEP-FI, as a keynote speaker, who will take the floor in a few minutes. Thierry Déau through video, the CEO of Meridiam, LTIIA honorary chairman and Finance for Tomorrow chairman. Nadia Nikolova, lead portfolio manager at Allianz Global Investors. Amit Bouri, CEO of Gene. Nathalie Lhayani, Sustainability Policy Group Director for Caisse, dépôts et consignations, CDC. And Megumi Muto, Vice President at JICA. Thank you everyone for being with us. And we will start the panel with a short video of Thierry Déau. Thank you.
Good morning, everyone. I'm Thierry Déau. I'm the chair of the Long-Term Infrastructure Investors Association, LTIIA, but also the chair of Finance for Tomorrow, the cluster of Paris Europlace for sustainable finance. I'm happy to be with you by video today and to wish you a very good work for this session. But wanted to say a few words about the fact that cooperation between global investors and LTIIA would like to lead the charge, and the public development banks is quite important in reaching a real scale-up of private investment in infrastructure in particular, and align this investment with the Paris Agreement. So we are facing a number of challenges, scaling up, but scaling to fulfill and reach the Sustainable Development Goals and the Paris Agreement. And so we all know for this to happen in infrastructure, global financiers need to align their short-term decisions of investment with long-term goals. And they do need to understand what it takes to be sustainable when making those investments. So the collaboration that you're having in the discussion today is also about aligning methodologies and a vision on how to measure sustainability. So we all agree and then can focus on scaling rather than aligning methodology. So it's quite a first important point, but that will unlock this possibility for global investors to join in public development banks and multilateral development banks in the scaling up of infrastructure investment to reach the SDGs. So I wish you a very good working session, and thank you again. And apologies for not being able to be with you in person today.
Thank you, Thierry. I'll immediately pass the floor to Eric to provide us with an overview of the status and potential cooperation between private investors and PDBs. Thank you, Eric.
Great. Well, thanks very much, Orith, and pleasure to be with you, and congratulations, I think, to the wider Finance in Common movement, and particularly IDFC members and Remy Rioux and all the energy I think that's building. We really welcome the opportunity to work together, bringing together both public and private leading financial institutions. I'm going to talk about, I would say, the two stages of financial sector transformation. How do we build a financial industry that's really, truly fit for financing the needs of society? The first stage, I wouldn't say it's done, but the notions around how do we integrate ESG into financial practice. There's been a lot of progress, and just to quickly mention some of it, we have the Principles for Responsible Investment, 4,000 members strong today, really ramping up their engagement in areas like active ownership. How do you be responsible investors? How do you do your proxy voting, making sure you're getting the right sort of directors on boards to help lead companies forward? And I would point to the Exxon vote this year, where three new directors were voted on by a small upstart investor who managed to convince a large part of the shareholder base that it was not fit for purpose in terms of the governance it had, and they made changes. The Task Force on Climate-Related Financial Disclosures and their ability to now develop good improving standards on climate disclosure, and first through the private sector leaning in, doing it voluntarily, and then we're seeing regulatory uptake. And today we have the Bank of Japan, the Bank of England, the ECB, all starting to put climate criteria into monetary policy frameworks. We have most recently the launch of the Task Force on Nature-Related Financial Disclosures, and actually we welcome AFD taking on a leading role in bringing in the experience and the involvement of the PDB community to that focus on how do we understand nature-based disclosures. We're starting to shift from not only understanding financially material risks, but also the notion of impact. And Thierry responded to that a little bit. We are increasingly seeing the need to shift more towards a double materiality or a dynamic materiality framework. We have, very importantly, the IFRS Foundation, which at COP is going to announce the establishment of the International Sustainability Standards Board. So we're all looking towards a convergence in trying to set the standards on how do you measure, how do you monitor, how do you manage impacts within the portfolios. We also, of course, have the taxonomies starting in Europe and China, but now many regions are trying to develop them. How do we make sure that we can prevent greenwashing, improve standardization and understanding, comparability, credibility of ESG approaches? I think in all this, the PDBs have really played a critical role in setting safeguards and working with the commercial actors to mainstream ESG into the financial practice, and including developing lots of innovative public-private financing vehicles, risk-sharing modalities. I think it's really helped to get the start for new green sectors in the developing world. It's still early days, but I think successes in areas like solar show that for energy generation, you no longer have to look to fossil fuels to be the least cost option. This public-private relationship has been key, and I think a basis for moving to the next dimension. And this is what the main topic of today is. The next stage really is about alignment, or we would say, how do you move from green transactions to truly green institutions? The green finance progress that we largely had coming out of 2015, the incredible scale up of green bonds, financing for renewables, electric vehicles, and the like, a ton of innovation. Not yet the scale that's required, and I think really the big problem is the notion that if you issue a green bond on a Monday, the question is, what are you doing Tuesday to Friday? Because if that reverts back to the business as usual, your fixed income portfolio is still largely not green. An individual green issuance doesn't change so much. So it's much more than having these whip-smart green energy teams or green finance teams. That's needed, but we need to figure out how do we broad base this notion across the organization, across portfolios. And I think for that, really, 2019 was an important inflection point, and in areas where we were involved, we worked with 30 banks to draft UN Principles of Responsible Banking. This is the first SDG alignment framework within the finance industry. Its first principle, there are 6. Its first is about aligning business with the needs of the individual as expressed by the SDGs, the Paris Agreement, and other relevant frameworks. The means to get there is the second principle, which is focused on implementing impact systems, so understanding the impact of your financing. And then once you have those systems in place, starting to set business targets on how you can make material improvements in those impacts. Today, we have 250 banks, about 40% of the global banking industry by assets, who are signed on. Last week, they issued their first biennial progress report. Some of the key figures, 94% of these signatories have integrated sustainability into their strategy formulation. 93% are working on impact systems implementation. 30% have started to set targets in areas like climate change, financial inclusion, gender equality, and nature. I think the most prominent form of SDG target setting today is in the area efforts to achieve the net zero transition that we all know is critically required. We'll very much be focused on in 2 weeks' time in Glasgow. We were very pleased to work with a group of leading investors in 2019 to launch the Net Zero Asset Owner Alliance. I'm very pleased that we have 2 of the founding members on the session today, CDC and Allianz, who've been critical leaders in helping build out this notion. Today, that group has grown to nearly 10 trillion in assets, US dollar assets. And today, they've actually released their first progress report, which very importantly, within the whole large universe of net zero commitments, we know 2050 is the goal, but what's credible is actually what you're doing today. And so this group of leading investors, what they've issued are the 2025 interim commitments, and you can dig into the details there and you realize that this is very seriously about what's happening today within the business cycle, not what we need to dream about tomorrow. I think if I have a little bit more time later, I'll come back and speak a bit more about these net zero alliances, including now in banking, which is really getting going. And I think what they're doing to implement change at the sectoral and company level, and this is really where the opportunities and partnerships with the public development banks can truly lie. Thank you. Back to you.
Thank you very much, Eric, for this introductory and I would say historic panel. Apologies. I think we have Javiez Diaz Fajardo, who's the only one physically in Rome today, so I couldn't see him on Zoom, who's also one of our distinguished panelists. So welcome, Mr. Fajardo, and we'll get going with the panel. I will start with a very simple question. And I will direct it to Nathalie to start with. What does SDG alignment mean for public and private investors? And more specifically, if you can elaborate a bit on your SDG integration project from investment practices to group-wide targets project that CDC has been working on.
Thank you, Orith, and good afternoon, everybody. I'm very pleased to be with you, even remotely. Caisse de dépôts is a great supporter of the Finance in Common Summit. So, well, just a few words about Caisse de dépôt to show you that we're a hybrid animal. We're both kind of a pension fund managing more than 200 billion euros um, in our asset portfolio, but we're also kind of a public national development bank active through our subsidiaries in many different sectors of general interest in the energy sector, in the transport sector. And we took many commitments as a responsible investor very early. We were one of the pioneers, very committed to adopting the PRI that Eric mentioned. We had commitments in the field of climate, on biodiversity, on social cohesion, on many different fields. And we felt the need in 2019 to really put coherence into all these commitments, to mainstream really our action on sustainability, to objectivize our impacts on sustainability, and to analyze risks of companies that we invest in as regards their own impacts on sustainability issues. And the COVID-19 crisis reinforced us in this way of doing. So it is quite naturally that we chose to mainstream our activities on the basis of the SDG matrix adopted by the United Nations, um, and to really adopt an institutional approach, as Eric mentioned it. We didn't only choose to create investment products that would be targeted on SDGs. We really chose to analyze all our activities at the group level um, as regards the 17 SDGs. And so the first thing we did is really to have a materiality analysis of our positive and negative impacts on the 17 SDGs. And then once we've done this analysis, we chose to focus our action at the group level the on 8 SDGs that were really material for us, 8 SDGs on which we could not only have an impact, but on which we could also contribute to national objectives. And as a public national development bank, it was quite important for us not only to report on these SDGs, but really to build targets, pluriannual targets that would be expressed in terms of contribution to national objectives and contribution to the French national roadmap on SDGs. Because as Orith mentioned it, the SDG matrix is first and foremost a matrix that has to be implemented by states. And once we've done this analysis, we've also chose 5 SDGs that were not material but important for some of our business units on which we only report. And so we now have an action plan or 40 targets covering all the issues related to sustainability. That is to say, not only climate, but also biodiversity, social cohesion, territorial cohesion, economic development. And these metrics, and maybe it's a good practice that we can share, um, is really a metrics that is integrated to our strategic plan, pluriannual strategic plan. So it really concerns the whole institution and not only our asset managers or not only our bank for local municipalities. It is really mainstreaming all our activities for 5 years. And just a last few words on the way we treated that. Um, in order to really integrate these targets to our strategy, our asset managers are incentivized on the achievement of this action plan, and all the salaries of Caisse de dépôt are also incentivized on the implementation of these targets. We also chose targets that could have co-benefices on several pillars of sustainable development. That is to say, targets that could enable us to have an impact not only on climate issues or environmental issues, but also on social cohesion. And for us, it's quite important to keep this systemic view of SDGs and to choose targets that are material, and that really enable us to play our role as a public financial institution to promote a just transition at the national level. I could share many other good practices, but that's
Thank
mainly
you.
the way we integrated the SDGs.
Thank you, Nathalie. Maybe Eric, you can elaborate a bit on SDG alignment as a integral institutional approach, and I think Nathalie just gave us a very nice example of how SDGs have been brought at the institutional level. From integration into strategies to investment processes, with the notion of how key the notion of holism is in this matter.
Thanks very much, Orith, and Nathalie for your comments. And I think pointing to your earlier comments, the SDGs are a very useful compass, but we also have to understand that often they're not really directly investable, and therefore it's the connecting points that we need to think about. How do you translate wider societal needs and objectives to something that actually can turn into using the skills and the resources from the finance industry? And I think the starting point is by establishing these impact assessment and management systems. And maybe the simplest one to talk about is green tagging. We're working in the mortgage sector. Do we understand the energy efficiency of the households? Is there a credit risk differential in terms of, are they lower risk if they're managing their energy more effectively? But to do that, obviously putting the systems in place, these impact systems, is challenging. I mentioned earlier financial inclusion, which certainly is a social objective. It's important, but also this notion of financial health. Do we understand the impact of our financing on households at the retail level? And increasingly, we're seeing more and more of a focus of trying to get the right sort of indicators. The indicators, we talk about setting targets that are smart targets, so they have to be, realizable, and they have to have all the fundamentals of what provides the credibility, and really means that the target becomes a signaling mechanism to help with your customers, your clients, to start to help steer change. Quite quickly, when you set these targets, it's easy to talk about, for instance, net zero at a global level, but the reality is it has to break down into sectoral. It's hard to get concrete until you start to look at specific industries in the climate context. Agriculture, energy, transport, building, construction, cement, steel. Each one of them will have a different transition pathways, and that's roughly going to be similar with most of the SDGs. You really need to look at individual sectors or industries, and you need to start working at that sectoral level. And almost, or basically all of the actors we work with will be very quick to say this is not about quick solutions. It's not about divestment very quickly. It's about engagement. It's about working with your clients to figure out how they can navigate. It's not necessarily about taking financing out of sectors. It's about trying to get finance to work towards new business approaches. I think the PDB relationship can be key for all of this, because as we can acknowledge, a lot of these are social, societal objectives, which from a purely commercial point of view sometimes are hard to internalize, particularly in the short term, and therefore bringing together the risk and return sharing and skills between the public and private sector is really key. The cooperation, as we talk about this topic of alignment, is once again going to be really important. And we've been really pleased to be working with AFD, with I4CE and others in raising the ambition within the PDB and the private sector on the notion of counterparty alignment with the Paris Agreement. And I think the PDB community, you've been working, operationalizing the concept for quite a number of years, I think back to 2017. Or at the One Planet Summit, the IDFC and NDBs issued a joint commitment towards this objective. I think there's been some progress at designing and implementing methods for how to do this. There's still a lot more work to be done. And I think I would call out the EIB, who's just passed their new counterparty alignment requirements at their last board meeting. And this really sends very strong signals. And that aligns very well with some of the work I've mentioned in the private sector, who essentially are also trying to do alignment. And if we can't get the whole financial system working in alignment, we're going to have the gaps where things fall in. So you can divest from high emitting activities and then someone else will pick them up and we don't get an overall social outcome. I should just a final point, just to give an idea of the scale. I mentioned the Asset Owner Alliance, including CDC and Allianz. They issued their progress report today. The starting point, as I mentioned, is about engaging with clients, but financing climate solutions is an important part of their strategy. And of those who have issued their 2025 targets, it's total $4 trillion of investment capital AUM. They have pegged 4% of their capital today, which is going into finance solutions. Now, 4% doesn't sound like that much, but it actually is about $160 billion that today they are investing in the climate sector. Just one of the SDGs. That is significant. Now, it's true that most of it is not necessarily in the countries that most need it. There are a lot of, particularly in the world, emerging markets, developing countries. There really is a lack of access, but there is this push going on to say, how can we get capital into these solutions? And I think that then tees up the opportunity for the private sector, different parts of the financing chain, with the PDB community to work together and to say, how can we deliver this? We believe that alignment, that we can get standardization of approaches. It's almost like the taxonomy is not only about what is a green deal, but really what is a green institution. And we need all institutions in the financing chain to be green and putting pressure and helping each other to get that alignment. This is what we need to get the entire financing chain stepping up and to make things happen. Thank you, Orith.
Thank you, Eric. I think what we can see here is the diversity of initiatives and some level of complexity because of the multidimensional nature of SDGs. What's also really clear is that when we're talking about alignment, what we're looking for is an optimum resulting from internal institution consistency and coherence and the actions of the various players. So I think it's fair to speak about SDG alignment ecosystem. So it's an ecosystem bringing together local and national governments, public administration, PDBs, businesses, financial institutions, and NGOs. So looking for the alignment of this whole group among each other and the alignment of everyone with the SDG is really what we're talking about here. So now let's see how practical that can be. Is the notion of SDG alignment practical for private investors and PDBs? What are the differences and synergies that we can see between them? Maybe Megumi, you can elaborate a bit on the challenges encountered to mainstream SDGs and build an ongoing IDFC work on SDG alignment, framing that common approach.
Thank you very much. I'm very much honored for the opportunity to speak in this very important panel. I think my role is to connect ambitions into actions from the eyes of the diverse public development banks, development finance institutions that are members of the IDFC. Let me first share how investment ecosystem is evolving in Japan, the impact investment ecosystem. I'm a member of the National Advisory Board on Impact Investing in the G7 framework. At the very beginning, the main members of the ecosystem were the investors and philanthropies, each motivated with purpose-driven leadership. A few years later, the financial regulator, the FSA, became involved. This was in the broad context of a corporate governance reform that encompassed ESG, climate, and SDGs. Now, as NAB, we are conducting impact investment roundtables with the Financial Service Authority to mainstream key common language as intention, impact measurement, and management. JICA, the DFI where I belong, is providing good practices to monitor SDGs' impact over the life cycle of the project, for example, in infrastructure. The involvement of this regulator has really increased the awareness and interest towards impact in the stakeholders in Japan. It has also created a forum to discuss local context-driven issues such as aging and decreasing population. Now we start to involve the civil society as well. and colleagues from this ecosystem represent Japan in the G7 Working Group for Impact Investment. Building on this experience, I wish to emphasize that the regulators are our allies in creating common language on SDGs impact. We are working very closely together among public development banks to create a common language in the initiative under IDFC. However, we may also need to recognize the value of common language emerging from each local ecosystem with the blessing of the financial regulators. Ideally, we may support the discussions among financial regulators linked to the G7 initiative so that the local bottom-up approaches and the globally led top-down approaches can join hands to create the practical common ground. I understand the urgency for standardization from the point of view of an investor, but if the initiative is not well rooted locally and legitimatized, stakeholders may lose momentum. This is especially true in the difficult area of just transition, leaving no one behind. Grazie a tutti.
Thank you, Megumi. Of course, we know there are discrepancy between private and public investors. And for private investors, SDG are not ready to use tools as Eric mentioned. Whereas for PDBs, it's a bit more, I would say, part of the raison d'être, or it's more core to their mission and their purpose. Maybe Amit, you can share with us the Gene's experience, more than a decade of experience of observation of the evolution regarding impact investing, which here would add a lot of value. Thank you.
Happy to do so. And thank you so much for this opportunity. And I want to take a moment just to thank everyone who's participating in the summit, including my fellow panelists, as well as all the participants from all around the world. We absolutely believe that the urgency of the Sustainable Development Goals means that we need to make every investment count. And from our perspective, the focus needs to be on scale with integrity. We absolutely need to move significantly more capital, but ultimately, we want and need impact at scale, not just capital at scale. And that's the backdrop for this conversation. For the Global Impact Investing Network, for those of us who don't know us yet, we are a membership network that includes over 350 firms from around the world, large and small. But we also do a lot of work around impact measurement and management systems, as well as research. And it's from that perspective that I'll be speaking about where we see the opportunities and needs. We think this focus on SDG alignment is absolutely important, but we want to make sure that all investors are going further than alignment to also focus specifically on how they can contribute to progress. Private investors and some public-backed investors have been working with us and over the last decade to develop and translate a common taxonomy for how to know when investments count. And that is called IRIS Plus, IRIS with a plus sign. About 2 years ago, we structured this around the Sustainable Development Goals to really speak to what we heard from Eric and Megumi-san around the need to translate these global goals written for governments into tangible metrics and operational targets that can be used for investors and companies. And that's what we've focused on through IRIS Plus. It has over 20,000 users around the world and growing, and it's freely available to help investors translate their impact intentions into real impact results. In addition to measurement, we also think it's really important to look at contribution, which is about the role that investors play in advancing impact, how they can move the needle beyond what would have happened otherwise. And it's important that investors are thinking about how they can directly contribute to the impact that companies have, and the company's impact on the Sustainable Development Goals and the broader climate goals. Now, one thing I do want to underscore is that while there are different departure points for public investors and private investors, there is a great appetite for collaboration from our perspective, and we have made some great strides in this direction. We've worked with a number of development finance institutions to help align the work that we've done with IRIS Plus with our community, with work that they've done around HIPSO, And that really demonstrated that this type of collaboration is possible. In partnership with the IFC and the European Development Finance Institution Network and the Inter-American Development Bank, we earlier this year launched joint impact indicators that helped align the indicators that were being used in the development finance world with those that were being used in the broader impact investment world. This is just the beginning. There's work to be done, but we absolutely think that this is possible. And it should not be seen as a barrier to progress, but rather just something that we need to collectively focus on in order to achieve our shared goals.
Thank you.
Just very briefly, I'll close this saying that the focus of this discussion is absolutely critical. We do need more alignment and collaboration between public and private investors. We need to be speaking the same language when it comes to impact. We need to be mobilizing much greater capital. And we think we can help work towards exchanges and applications of shared language and ultimately tools that tie us together through investment. Thank you very much.
Thank you very much, Amit, and that's very clear. And I think it's not the time for Nadia to share her experience of impact measurement, of how the risk of SDG washing is existing, and how do you actually measure, assess, measure, report, and manage according to your understanding of the SDGs and the level of granularity, etc. Thank you, Nadia.
Thank you, Orith. And first of all, thank you very much for having me here today. It's really a privilege, and also to listen to the different initiatives and the convergence that I can really see. The convergence of methodologies, of course, when you're having impact can be very subjective. So when we have a topic like impact, different methodologies arise along the way. And I think we're getting to a place where we're really starting to see convergence on the methodologies, on the measurement ways, on the impact indicators. The framework of the SDGs it's an interesting one, because it's, on the one hand side, is very broad, which can be a positive and a negative thing. Positive from the perspective that it gives a lot of flexibility, in particular on transactions that maybe don't fit neatly a specific sector, or don't specifically fulfill certain predetermined indicators. On the other hand side, because it's so broad, it exposes itself to a risk of what already you referred as impact washing, or SDG washing, as nowadays called. And I think as we are seeing more and more methodologies aligning themselves, the universe of available methodologies out there for investors is going to be able to align to a more concrete place where hopefully that will be less of a risk across public and private markets. I wanted to get into, because at the end of the day, if we think about what investors receive, it is usually an investor report that says amount of capital invested into a specific SDG. What is behind the way that numbers was analyzed is a whole different matter. And that tends to be different in the various markets. If we look at the way public capital markets behave versus private capital markets. In the public capital markets, where we have significant amount of data, there's been a proliferation of SDG-aligned products, which has been very, very helpful. And when there is data, transparency of that data, what we're seeing is a common ground. So the possibility for impact washing, of course, decreases over time. Now, private markets, in which most of us operate, are more challenging in that respect, because data is not available readily, and it's not readily available. If we drill down further to emerging markets, then the problem is even bigger from an institutional investor perspective. And this is where partnerships with development banks and development-focused institutions in general has been incredibly helpful. As for impact investors for decades, not only do development banks have very robust methodologies that are established, but they also have a significant amount of data, which brings me to the same place. if we had an opportunity where all that data was publicly available, I think we would have seen a much bigger alignment in both methodologies and a lot more transparency in the system overall. So if I could ever have my wish list, I would definitely have all of that data anonymously aggregated and available out there, because I think that's going to be a great way of mobilizing more private capital into the SDGs for some of the most challenging regions out there. Methodologies, of course, of development banks differ tremendously one from another. And I think they tend to have existed before the SDGs were announced in 2015. So what that has meant is that those impact models have been ramped up to be mapped to the SDGs, which has created even more divergence in those models. But I think it's wonderful to hear of initiatives like the ones announced earlier today of convergence of those methodologies as well. Hopefully more transparency is forthcoming.
Thank you very much, Nadia, and I think you're bringing us very naturally to our next and last point about action. You know, we need a common language. That common language is needed to raise capital, to jointly invest, to transfer know-how. It's extremely clear that there is a lot of mutual learning to be organized. So finding the common playground is key, that's for sure. But what really will matter most is the ability to operationalize and define set of action to converge towards that SCG compatible language to align, stop, transform, and boost all investment. I what are incompatible activities while financing the just transition. Maybe a couple of words from CDC, Nathalie, on that example of the that net zero asset owner alliance, and how what you've described on SDG was specifically applied to climate, and how you put that into that collective commitment is translated into concrete actions.
Thank you, Rory. There are a lot of questions raised there, but just to rebound on what Nadia and Eric said about SDGs, I think that what we can conclude today together is that SDGs is a very good matrix in order to measure impacts and contribution to national objectives. And at Caisse des Dépôts, we chose to set objectives like not only putting billions next to each other in order to show how we will finance the green sector. We will mobilize 60 billion euros on 5 years to finance green sectors. But the target we chose to set is really a target related to a national objective, which is contribute to financing 1/3 of the needs in order to reach national climate objectives. For us, the SDG matrix is really interesting for this, for materializing our impacts and our contribution to national objectives regarding sustainability. It's a very good way to monitor your action. It's not the perfect way to monitor your investment. And to do so, you need to translate SDGs and the indicators related to SDGs into ESG classical indicators. And in order to build on the concern of creating a common language between public PDBs and private investors, I think one of the good tools is, of course, normalization, regulation. You probably know that at the EU level, there's a big wave of harmonizing extra financial, non-financial reporting indicators on all fields of ESG, and of course, getting inspiration from the SDG matrices in order to build this normalization is quite important, and it's one of our main claim is that this normalization could be also generalized at the international level. Another way to create this common language is really to have institutional investors and investors that are at the frontier between public and private sector have the same requirements and criteria on towards companies they're investing in. And that's exactly what we're doing in the Net Zero Asset Owner Alliance that Eric mentioned. It's an alliance that on climate issues builds up a same language between pension funds, sovereign wealth funds, some PDBs, and private sector institutional investors on what it means to be aligned with a 1.5-degree scenario and how this should be declined into shareholders dialogue. And so this is a very powerful coalition in order to really leverage on the private sector, on companies, in order to really change their business model. And so this alliance, I don't want to be too long, but I think it's quite interesting to see what we managed to achieve in this alliance. We achieved to adopt, well, common alignment language, scientifically based, and with common criteria in order to engage companies we're investing to themselves align on a carbon neutral pathway.
Thank you, Nathalie. I have to cut you here because we're
Okay.
only 3-4 minutes to go, and I'd like to hear maybe Nadia, Amit, and Megumi, all of you, if you were to come up with your one recommendation and action point. Nadia, you've maybe starting with you. You've mentioned data, which I think is a super interesting and key element. Amit, what would you be your call for action here?
Two things. I think I absolutely agree.
And you've got 1 minute, by the way.
Okay, I'll be fast. I absolutely agree with the point around data, and would like to second that. I'd also add this point that came up both from Nathalie and from Eric around the need for investors to set targets, focus on contribution and positive impact, and then manage their performance towards those contributions. And we hope to be an ally to anyone who's interested in that work.
Thank you, Amit. Megumi, on your end, what's your
one
call for action?
Okay, one call for action is here we are not involving governments, but they are on the driving seat. So let's not forget about those who signed the SDGs and really make sure we align with their ambitions as well. Thank you very much.
Fair enough. Nadia, shall I provide you with the last word?
I have two. One is data, and the other one is scaling blended finance.
That's a very good conclusion. I'm going away with a number of keywords: scale, integrity, holism, convergence, data, coalition, and targets. I think we have a good amount of work in front of us. I am being spot on, so I will thank you very much. I'm sorry we didn't have double as much time to go in more details in all of your impressive initiative. Thank you very, very much for sharing your experiences and views at this Finance in Common Summit, and I'll hand you back the floor. Thank you all. Thank you very much.
Thank you.
Thank you.